Welcome back to Virtual Trade. I'm joined by new trader Jenny Horne. Jenny, welcome back to the show.
Happy to be back, Scott.
Well, Jenny, what we're going to do is we're going to look at Thinkorswim platform and learn how to move away from emotional investing utilizing specific tools on the Thinkorswim platform.
Well, I'm excited because I think a lot of stocks I did pick emotionally in my portfolio, so I'm ready to learn some things.
All right. Well, listen, what we'll do is we'll get started on the Thinkorswim charts and we'll pick an underlying stock, maybe something like Cisco, and see how we can use some moving averages, which are studies, to give us a little bit more of that detachment and give us some maybe some information we can pull from the charts themselves.
All right, great.
All right, well, why don't we get started, Jenny? I'll have you go ahead and take over the controls, and we'll go to the charts tab right now and go ahead and enter the symbol as we always do, CSCO, and hit enter, and there we are. So we can see a chart pops up right now, Jenny. It looks like we're looking at a 1-year daily. And you can always see what your chart is by looking just below the symbol. You can see what we're looking at, a 1-year daily chart. So what we're going to do, Jenny, is add some simple moving averages. Now, we kind of looked at entering using one simple moving average. Today, we're going to take it to the next level and actually look at two and see what we can discern from the two different moving averages.
Okay, great.
All right, so let's start off by adding a study. So first step to add a study, where's your favorite place to go to do that?
Well, you showed me last time. I do like the beaker a lot.
I do
it's
too.
One step. That's
one
easy.
step. All right, so now the studies open up, and of course this is going to be simple moving average, so just type in the word simple, and there you go, moving average. Now, Jenny, what we're going to do is add two. I see you just double click to add one. Since we're going to have two simple moving averages, let's go ahead and add the second one now as well. And yeah, double click or add, that's perfect. Now apply and OK, and then we'll be good to go. Now you can see that we're showing the moving average. I think we have one in there, but let's now go ahead and sort of customize our simple moving averages, because I know you like perhaps the thicker line and maybe some different colors. So
I definitely do.
Let's go back to the beaker again and let's edit these two studies to get them set up the way we'd like. So let's click on the first one, for example, and go to the far right and click on the, there you go, the little gear icon. And this is going to go ahead and to give us what kind of line we have and what color it is, Jenny. So what's your choice there?
Well, I will make it a little thicker because I do like when it's very obvious. So I'll make it 4 and I'll make it white.
Okay, so the first one is going to be, go ahead, all right, now hit OK. And that will save that one in that way. Now let's go to the second one, because we're going to want to have a different color on this one so we can see the difference between the two, because they will be crossing from time to time.
Right.
So same process, change your width.
And I'll make this one this pink
sort
color.
Of a pink color? Okay, perfect. All right, now hit apply and OK, and let's see if it's showing our two averages. Now right now I'm going to guess those averages are pretty close to each other. Let's just make double sure on that one. Let's zoom in perhaps here to see if we're seeing both. Actually, I'm not seeing both, so let's do this. Let's go back here, make sure that they're both showing up here. Two moving averages. All right, what I'm going to do is click the second one and go back to simple. Now watch what I do here. It's S-I-M-P-L-E. And I'm going to add this, click on the simple moving average and add the moving average, and we should have two in there. All right, hit apply and OK. And as though we're seeing just one of the two simple moving averages. Let me just zoom in a little bit and make sure that we're seeing two. Now, the reason that is because right now we haven't changed.
Right, I was going to say, do you think it's beneath it?
That's exactly
the
what it is.
exact same thing.
So when you see things like this, that's a perfect example of saying, well, wait, we have two studies, but we're only seeing one. Well, guess what? They're both the same study. So let's do this. Let's go in and change the two settings on the two simple moving averages so that we can see them differently.
Okay.
All
so
right.
I'll go back to the beaker, I'm guessing.
Yep, absolutely. And click on the edit. Now we're going to change the first one to a 20-day. So you can see under length it says 9. We want to change that to 20.
Okay.
Perfect. And we'll hit OK. Now let's go to the second one, same way, and we'll change that one to 50. So remember, moving averages are just giving you sort of the movement on the chart on an average over whatever days we pick, or the length of the time here. We have 20 different times on this, and now remember, each time is one chart or one bar on a daily 1-year chart. So now take a look. Let's zoom out just a little bit here and take a look now. As you can see,
now they're different.
Now they're different because we have different parameters for each. One's 20, one's 50. All right, so now we've got that all set up.
I have a question. Now, why would someone be using these to trade? Because I understand what it shows, but I don't really understand how it would help me make an investment.
Well, you're absolutely right. Many investors will use studies like the moving averages to help sort of assist them in keeping the emotions out of trading and investing. And your question is spot on. Many people ask the same thing. The hopes of using these kinds of studies on a chart are to give us a little bit of predictive nature. In other words, if we're seeing certain patterns like we're going to see here, when a moving average crosses over another moving average, what does that potentially tell us about the future direction of the stock? So obviously for someone who's picking points to get into a stock or out of a stock,
right,
having any kind of help in that direction by using something we call technical analysis or studies on charts, sometimes that can help them make those decisions.
So now why would I use the 20-day or over the 50-day or vice versa?
Very good. Well, take a quick look here. As you can see that the 20-day is the white line. You can see that moves around quite a bit more than the 50-day, which is the purple line. It's a little smoother. So what we look at is the 20-day is sort of representing a shorter term movement or momentum in the stock, and the purple is representing a longer term movement in the stock. Now, we can sometimes see that the shorter move in the stock moves above and below the longer term. So it sort of gives us a little bit of idea, hey, well, for right now, at this particular time, it seems to be moving a lot more than it normally does, or it's dropping quicker than it has in the long run. So when they see these two cross over, that can give them potential signals. So let's do this. Now that we have those two, when we looked at a one-year chart, let's take a look at any kind of particular moves that we've seen in the stock. Well, let's look at the 20-day and see where it crosses underneath the 50-day. It doesn't cross underneath by much, but you can see here it starts to cross back over and the stock is moving up at the same time. Now, if there are certain times when you see both the short-term moving average cross above the long-term and the stock is moving up, that can be a potential signal that the stock is in an upward or will potentially continue an upward trend. There's never a guarantee or assurance, but oftentimes it does. If we go back to the beginning of there, take a look when the first time the white line crossed over the purple line and the stock was moving higher. Look what that showed. That short-term moving average stayed above the long-term for quite a period, and look what the stock was doing during that entire time. And then when it crossed back under here, that's a little bit of a, I don't know, I would call it a red flag or a warning that maybe that long-term trend is coming into question right now.
Right, okay, that makes sense.
All right. All right, so now we've looked at sort of the short term. Let's do this, Jenny. Go ahead and let's go into the time frame and change that and look at a much bigger picture. So let's go down to, change your time there.
Okay.
And under our interval, we'll keep it, we'll go to the maximum allowed. All right, there we go. So let's go back as far as we can and let's change our aggregate type, and that will reduce the numbers that we're having. Jenny, what I'm going to do is just hide the left side bar so we can give this chart just a little bit more real estate on our screen. Now, this is interesting. When you start taking this sort of comparison study, if you will, to a bigger frame, it can give us more of a long-term picture of what the stock is doing. So let's go back to the peak, which is back here in 2000, which was the sort of the peak of the tech bubble.
Right, that makes sense.
Do you remember that?
I do, barely. Right, they really moved in tandem at this time period somewhat.
Exactly. Mm-hmm. So let's say at this particular time you were wondering about, well, should I add Cisco potentially to my portfolio? And you see this just taking place. You might think, wait a minute, the short-term moving average just crossed over the long-term moving average. Mm-hmm. See how it just dove right below it, and the stock is moving down. That, like we said, might be a potential, wait a minute, maybe this is not the right time to invest. Does that make sense?
It does make sense, yeah.
Since we're building portfolios, we're always looking for potential cues as to, is this a good time?
Trends to kind of follow the stocks, that makes sense.
Right. Mm-hmm. So basically what we're doing here is by using tools like this, it can potentially help you take some of the emotion out. Notice I used the word some.
Some, right, because when it is your money, I mean, it's hard not to care if you're losing or making a lot of money.
Exactly. We can never take all the emotion out, right, Jane?
Exactly.
Okay, so what did you think about what we covered here so far?
Well, I thought this was great, and again, I never really knew a lot about charts, and I think this is another way to kind of add that level of understanding on what's going on behind the movement of the stock.
And help you potentially remove some emotion.
Exactly.
From the process. Okay, well, thanks, Jenny. That was a lot of fun, and we will see you on our next show.
Thanks, Scott.
All right.